you've always got a good finger on the pulse of the financial services industry and what's working and what's not working. And you've coached a lot of people, a lot of advisors. So can we start by helping us understand what are some of the opportunities that you see for advisors when it comes to growing their firm, kind of moving forward into 2023 and beyond?
Yeah, so I think there represents an unbelievable opportunity, perhaps a better opportunity now than has ever been to grow a practice or an individual advisor's book through digital channels. And the reason why I say that is because one, there's so many people that's where they kind of do work, they do life in digital channels. But the challenge in the industry has long been we get clients by people that we know or referrals, or our cold marketing is through seminars, which doesn't really have a whole lot of scale. So while there's tremendous opportunities in the digital spaces, YouTube, Instagram, LinkedIn, TikTok, there's like untapped, unlimited opportunities. There's also a whole host of challenges that come with it. So I see tremendous growth and growth opportunities. I think the pandemic actually accelerated many of those opportunities or opened the eyes for a lot of advisors and firm leaders, their client base, through what I'd call the non-traditional mechanisms of client acquisition. Does that make sense?
Okay. Yeah. So the way I always think about it is like the five ways is either referrals, like you mentioned, or COIs, CPA relationships.
Yep.
There's cold, which I would say seminars is part of cold because you have to get people to the thing. So there's not much relationship there in the beginning. And then there's free content and then paid content. So you're kind of thinking of are you talking about free or paid?
When I think about attracting new, really good fit prospects into a financial services business or an advisor's business or really any business, I don't always look at it as like, should I do paid or should I do non-paid, right? Should I do organic content or should I use paid media? I always think about it in terms of, and I think this would help a lot of people to understand how to think about media or marketing is by leverage. So if you have more time than say you have money, then use organic mechanisms for marketing, right? Because you've got more time, you can do content creation, you have more time, but you don't have the money. But if you have the money, then use paid media because that's where you can leverage and get your time back by basically using money as a leverage, right? So you have to leverage something. You're either going to leverage your money or you're going to leverage your time. And so if we're kind of draw a line between the two, I think that helps a lot of people when they're wondering, where should I start? Start with that basic understanding of, one or the other. Now, pay organic media, oftentimes it takes longer to gain traction. That's not a problem, right? That's not a problem. So for some people, they're in a position where they're like, well, I have the money and I want to use paid media. Well, you can use that as an accelerant, right? Because it's almost instantaneous feedback. And you can use organic media as a long play, right? Knowing that the strategy will, over time, your organic media will have the capacity to basically outpace your paid media. Because what will happen is you'll actually run into bottlenecks from an operations standpoint. You won't actually be able to handle more than what your team can support.
With organic, you're talking about, or with both?
With both. You can break operations with organic. You can have more flow, lead flow, appointment flow than you can handle. That's going to take longer to get there, but you can also get there, and you can get there a lot faster with paid media. Yeah. But with both, you can break your operations, right? And so you have to be very intentional of, all right, this is who we're after. This is our focal point, right? And a lot of people think it's like, hey, I turn ads on and leads start coming in, and all of a sudden, all my growth problems are solved. It doesn't work that way.
Right. But it is a great way to test, to see the breaks and then test out and just because one of the things that I didn't know was the benefit of having, so we went the free route and it took about 10 months to get to see any fruit from it. And then we got to get so much practice, which
Mm-hmm.
really helped with the first meetings, and it let us redesign, what works, what doesn't work. So that was kind of fun. And knowing that we couldn't help everybody, we were still having a whole bunch of meetings to just try to figure it out as we go. And we found something that clicked. The 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 free, yeah, the paid route is interesting. It's something that, even though it's not needed right now, it would be nice to have more of that controlled lever of
Mm-hmm.
on and off if you do have the right operations to support everything. So when it comes to the paid route, there's, all these different as I'm exploring what could we do when it comes to the paid route. Where are you seeing the most bang for your buck, or because it used to be Facebook ads, or it used to be something else, and now it's this.
Mm-hmm.
What are you seeing right now for advisors?
I'm going to put an asterisk next to this. It depends on who it is they're trying to market to. So you have all these different platforms, you have all these different media channels that you can market into. But it's which channel is dependent on who is your client, who are you trying to reach? And like, let's say that your target market is, pre-retirees, 58 plus. My recommendation is not going to be, hey, you should run TikTok ads. It's not that you can't reach some people there. It's just the concentration of people in that demographic. That's not where they're spending their time. But if you want to reach kind of the next gen, you want to build a practice around the next gen, TikTok is a channel or a platform to do that. So is YouTube. In terms of platforms that kind of have what I'd call an audience where it's big enough that you could say, hey, if I want to market to these people, or these people, YouTube is certainly a platform for it. Instagram is another, Instagram is part of Facebook, but Instagram is a great platform, tremendous opportunities there. We're seeing a lot of traction in both Instagram and YouTube. And LinkedIn, from a paid media perspective, is an up and comer. I think when we evaluate the channels from a media perspective, we look at time on platform and engagement, right? So if time on platform and engagement is important, I think it is, because it's where people are spending time. So therefore you can serve your media, your impressions over and over and over again to the same person. A lot of times it's going to take 6, 7, 10, 15, 20 times for that person to see that same ad from you, for them to actually action it. And if there is not enough time on platform, you just simply can't serve the impressions enough over a period of time for that person to actually respond to it.
Mm-hmm.
Does that make sense?
Yeah.
So when I look at opportunities for advisors, firm leaders, like where should you be going, or where should your media strategy be? It's highly dependent on who it is you're trying to reach and who you're trying to build the business around. And so that's kind of how we think about, channel. It's not like, hey, everybody should be on YouTube or everybody should be on TikTok, or, it doesn't.
Yeah.
Yeah.
So very selfishly here, if we're going for ideal clients who are pre-retirees, 1 to 3 years out, or already retired, where should I go? There's a lot of advisors like that.
There are. So we really like the Google platform. So Google search, YouTube, their whole ecosystem, fantastic. Right. So that's from a paid media perspective.
Okay.
And then we're seeing a lot of traction on Instagram, another great channel for reaching that demographic. And those would be the two primary channels, for if the focus is on that pre-retiree. You can still, Facebook is still a channel for that demographic as well. There's been some challenges with Facebook from there's been a lot of changes at Facebook that create an environment that can be challenging for buying media. Not that we have clients that we're running media on Facebook and we're getting great results, but again, there's a host of challenges that come with that I would say most advisors or firm leaders probably don't want to deal with, and there's alternatives that are just as good and just as viable. So I really like YouTube right now. YouTube, Google, that whole ecosystem.
So for me specifically, if we didn't have the flywheel going for the free content marketing, and would I come to you? Are you actually, your firm actually helping advisors with implementing the Google, the YouTube strategy?
Yes.
What does that look like?
Yeah, so we start with just who it is you're trying to reach. This is just, so what I'll go into is not, I don't think this is anything unique to us. I think this is just good marketing foundations. And so just to understand good marketing foundations, you have to know who it is you're trying to reach. So if we know who it is you're trying to reach, right, the types of clients you like working with, the things that your current clients like about your firm and the work that you do, where they find value, right? Those are all elements that would go into a marketing message to reach a target prospect. And then from there, you basically can create a number of ideas around how to target these people based on keyword interests, things they like, things they follow, and then basically create a campaign strategy around, putting your media, your ads, if you will, or video in front of that target market and generating some type of response from it. Right. So that's kind of the big framework of how, right? There's obviously intricacies in, do I need a funnel? Do I need a website? Do I need all sorts of stuff? There's obviously, you have to solve some of those things and answer some of those questions, but big picture, it's identify target market, develop a message to that target market that aligns with them, and then put it in a format that is consumable in the platform that you're using to target your prospects. So where people can get some of this stuff wrong is they don't know who their ideal client is, or they have a vague idea of it. They don't have any idea where their clients find value or the problems that they're actually solving for their clients. That's a big problem. And the media that they use may not be congruent with the platform they've decided to use, to reach that prospect. You have to have all those three things in alignment. And that is what I call a well thought through, media strategy. And then we get into, all right, well, how do we know, how does it work? How do we get it working? What's the, how does all that happen? Should I run two different markets simultaneously? My mindset around campaigns and campaign structures is remove as many variables as you possibly can. So you want something that is very simple, very easy to action. And so when we're leveraging paid media, we actually want as few variables in the whole equation as we can possibly have, right? So one channel, one core marketing message, one call to action, right? Not, I want to go after this market, I want to go after this market, I want to test 3 different funnels, and it's no, that is a broken strategy. Because if you have, how my brain thinks about it is that if you have, this goes back to my math background. So if you have too many variables in a multivariate equation and not enough constants, you have an unsolvable problem, right? And a lot of people approach their marketing with they have an unsolvable problem with the way they're approaching their marketing.
Super interesting. So if someone calls you up, you go through, you get focused, you get the well thought through media strategy, and then you get into the let's test and figure it out and then find what works. Yep.
And then from there, everybody wants to get to scale as fast as they possibly can. But before you can scale, you then have to work out your sales and your operational process.
Let's talk about that. Unless you've got any other things related to, because I'm seeing it as kind of like, we just talked about finding ideal clients, right?
Yep.
And then it's or finding ideal prospects, and then how do you talk to those ideal prospects so that you can get the trust? I know you've got the trust stacking system and all of that, but anything else related to the finding of ideal prospects, kind of the growth?
Well, so yeah, let me frame it up. And I think this frames up also a real opportunity for advisors and firms, is that if you understand and this is specifically through like a paid media acquisition strategy, if you know how much it costs you to generate a meeting with a qualified prospect, and you know how many meetings you need to get with qualified prospects to convert into a new client, and you can attach a dollar figure directly to your acquisition, cost per acquisition of a client, CAC. If you know what that number is, here's what we know in financial services. Most advisors and firms will retain a client for 15 to 20 years. I think the average is about 15 or so years. Okay, so if we understand that our retention of clients is, we'll call it 15 years, and the revenue or the fees that are generated over those 15 years, maybe we just call it $5,000 a year. Okay, so maybe an average client generates $5,000 a year in fee-based revenue. Maybe there's other revenue, but let's just call it on average 5K. Okay, so if we know what our acquisition cost is for a client, then we can then look at our long lifetime value of that client. And most often for most advisors or firms, if they spent the time to figure those numbers out, they'd realize that they have between a 35 to 50x cash ROI on the acquisition of client. And so, Dave, we talked before briefly about some of the VC money that's been kind of pouring into this industry. That's why it's pouring into this industry. It's because VC is like, hey, where else outside of tech can we get like huge returns, right? Because what they're looking at is leverage, right? I put X in, I get Y squared out or X cubed out, right? It's a simple math, right? So why are some firms, why are there firms that are getting $100 million in funding? Well, it's because of that simple understanding. They know what it costs to acquire a client, and they know what the lifetime value is of that client. And so they can see over 15 years or 20 years, they're going to have a 50x ROI. Yeah. So that's play the long game.
So those firms that are getting those crazy valuations, they've figured out the lead engine and the acquisition. They figured that all out, right? So then that's when the outside firms are coming in and saying, you guys have it. No question, they'd invest. Is that just, you talked about that. So is that value on paper? Are they buying the majority of the firm? Like how is that really working? That kind of blew my mind when you said that, around the 30x, 50x revenue valuations, I think is what you said.
Yeah, they're basically buying the equity in the firm, and they're looking at an exit, at some point in time, and they can show that the trajectory of the value of the business over the next 10, 15, 20 years is going to be Y. And so that generates a huge valuation that warrants VC to be like, hey, we'll be in this for 5 years or 10 years and get, a big exit and a big return on our capital, right? Because the valuation of the business is going way up based on that front end, based on some of those front end metrics, right? Because if we look at the tech industry and the tech space, one of the big metrics that drive value in like software companies is what's their client retention rate, right? What is the retention rate or the churn, right? The attrition of new clients. So I used to own a software company. I raised venture capital, and one thing that when raising VC, we'd always run into, what's your cost per acquisition? What's your churn rate? Well, it's the same thing repeated. This isn't unique to financial services. This is true of a lot of businesses. So if you have a really high client retention rate, and financial professionals do, right? That's what drives your ROI. That's what drives your return on capital. It's because you acquire that client once, they pay you for 20 years, right? That's worth investing in.
some of the firms that you had mentioned, the Facet Wealth, Farther
Mhm.
Wealth, are those look like not just traditional wealth management shops. They're Are they more tech companies because they have some other offerings? Like, is that a piece of the puzzle of why these outside firms are coming in and saying this is it? Because like our firm is a traditional wealth management firm where we're
Mhm.
helping a number of clients and we're growing at a sustainable rate and all this stuff. But that's it. It makes it hard for me to think. Okay, because we started here, we were talking about what's the cost to pay for a potential new client if we know all the numbers of how long they last, and then these outside firms are coming in. So
Mhm.
do outside firms wouldn't see our firm as a 30x valuation of a regular firm, right? You need something else that's
I don't know.
valuable there,
Have
right?
you started? Have you started to shop it with the right?
No, no. What?
So
So what else?
that's what's funny about this whole industry is most of the time where people are looking at the valuations of the business, they're valuing the business based on like, oh, I'm going to go acquire so and so's book, but outside capital doesn't necessarily evaluate things the same way, right? And so I think going back to that question is there anything unique or special? I don't have access to the IP of these firms. From a from a 10,000-foot view, I think it's a new wrapper on an existing business model. But it's not. What I am not seeing is that this is a completely new, way of doing things, and it's never been done before. I think there's just been some smart people that said, look at this over here, and if we combine these two things, because we have an industry that is kind of lagging from an innovation perspective or a technology perspective, this presents a ripe opportunity for some smart folks to put what I call a new wrapper.
Mm.
Right. This is not what I'm not seeing is I'm not seeing the the Uber versus taxi cab innovation. I'm not seeing that type of thing happening. But what will happen is that firms that understand how to acquire clients in the digital spaces and know how to retain them with the historical industry metrics of 15 years, they're going to be set up. They're going to be set up for a long time to continue to win.
Mm-hmm.
Yeah.
Yeah, that's super interesting. The takeaway from this little side thing about around valuations is knowing your numbers when it comes to what does it take to have a new client, and then how long will they stay a client, and what's the lifetime value, I think is what you said, right?
Mm-hmm.
And then that
Yep.
helps you make decisions on paid media and what makes sense, right?
Yep.
Okay.
Yep.
That's yeah, because I think like a lot. Actually, I don't know how people would think about it right now. How advisors would think about it. It's maybe like because right now it's just 3x, right? They're paying or they're paying 3x per year for the annual revenue of a year. It's like the standard value of what a client is, right? Does that still seem true to you?
Yeah.
Okay, interesting.
Yeah. But if your business, I mean, one simple idea for a lot of, and this would not be for most advisors because they wouldn't have the ability to do it. But one simple idea for a firm that's, maybe got $500 million or more under management is start to invest in a technology infrastructure that is unique to that is specifically, the IP is specifically owned within that business. Why? Because it'll multiply the value of the firm.
Yeah. And again, now when thanks for rolling with me on these different things. Because for us, we're thinking that Streamline is a legacy firm. We've got these other advisors who are awesome, super smart, smarter than me advisors coming in and future owners. And so it's really for the person or the advisor who is to take that route, they'd be looking to maximize valuation and have an exit at some point. It's not for many people, everybody.
No, exactly. I think there's two ways of kind of looking at how a lot of advisors or firm leaders kind of view their businesses. One is they're going to build, equity value in the firm, or the other route is I'm going to build kind of a lifestyle practice of my firm. I would say for everybody, if you view the business as at some point in time, you're going to cease doing that work. So I'd still encourage just about every advisor or firm owner to still view the business as I want to build equity value in the business. That does not necessarily mean that you need to invest in, building your own tech stack or anything like that. But I'd have some of the metrics. What would ratchet up a valuation for a business, even just an average advisor's business, is if they have a client acquisition system that's dialed in. That adds tremendous value to that business, because most advisors, I think the industry average is like average advisor brings on 7 to 8 new clients a year. Okay, so if the average advisor, and I think a wirehouse advisor is maybe 4 to 5 new clients a year. And what we see is that through a well-executed client acquisition strategy, you can bring on 4, 10, 20 clients a month or more, so long as your operations can support it. Right. So if you wanted to build a lifestyle practice, you could say, hey, I'm only going to take on maybe 2 clients a month. That's totally fine. That's at the pace that you want to operate the business. There's still more increased equity value in having a client acquisition system, right, that can basically feed that business or feed the lifestyle and can continue to grow. And it can also be sold as part of the book. And now you're going to have a better valuation because you would likely be handing a client acquisition strategy to somebody who probably doesn't.
Yeah. Except unless it was right now, it's kind of like it's not always going to be this way, but right now, again, personally, it's the personal brand type thing we've got where it's primary face for doing the marketing. So that would seem less valuable in terms of, because it's not the system of, it requires one person to do it.
Right. So, but you've built IP around how you create your media. You have a media strategy, right? From an organic perspective. It's not like you're like, hey, I'm just going to create a video and post it and see what happens. It's well thought out. That can be taught to somebody else, and somebody else could become the face of the business, right? They'd have to be trained into it. There'd have to be a transition, but what you've accomplished in your own firm, you have a what I call a client acquisition strategy that is well thought out and it's well executed, right? Most don't have that, right? So that certainly increases the value more than just what I call the book value.
How much more?
I don't know. It depends on the buy. It depends on the buyer.
Yeah,
doesn't it?
That's super interesting. So I'm an advisor. I found a client through some sort of acquisition channel or paid advertising, and we're talking to them in the first meeting. So what's next? How do you continue to build trust and actually make that relationship happen and provide value and service to people?
Yeah. Okay. Great transition. So while we have this tremendous opportunity in the digital spaces, right? It's untapped. I mean, there's unlimited opportunity is one way to think about it. Unlimited. Okay, so if we have unlimited opportunity, what challenges do we have to meet that unlimited opportunity? So I think the biggest challenge in financial service has always been having prospects, trust the advisor and trust the advice of the advisor. That's always been, I think, one of the big challenges, and certainly now more than ever. So if trusting the advisor is one of the big challenges that we have to overcome when we're going into digital channels, which are largely untrustworthy in many ways. Or we don't know what to trust in these media channels. The challenge is now increased for the advisor or firm owner to build trust in the digital spaces, right? And so I've been doing work with advisors for about 7 years now, 6 years under the Castor Abbott brand. And it was about 4 years ago, about 2 years into it, that I hypothesized, and we talked about this briefly, but I hypothesized that the traditional way that advisors, bring on new prospects and bring on new prospects, through what I call cold media channels, seminars and things like that. Those are high trust environments, right? You have somebody in a room, they're probably not going to leave. They're going to sit through the whole presentation. They can see you face to face, right? You're generating a lot of trust. And so then there would be, 3 meetings, right, to get some type of commitment, right? That's kind of what I call the legacy. And right. And most of the time, those 3 meetings would all be in person, right? Meet knee to knee, or, in the conference room, fancy office, all this, pomp and circumstance, right? Building trust, building trust, building trust, building trust, move assets. Okay. So that requires a lot of trust. To move assets requires a lot of trust. I hypothesize that in just about every other industry, it doesn't start that way. In just about every other industry, regardless of channel, of how you engage with a professional, there's some type of front end, fee to engage with that professional for their service. In financial services, for some reason, there's all this free work loaded up front to try to create this bridge of this trust. But free does not build trust. It doesn't. Free offers oftentimes can put an advisor in a position of having to prove that their free is better than somebody else's free. Right? So if everybody is equal, and then the other challenge that creates is that the person, the prospect, the client who is evaluating one free versus another free, they're actually not qualified to evaluate one if one is better than the other. Right. So if you were to look at it from a patient perspective, let's say I'm a patient, I've got some shoulder pain, and I go talk to Dr. One, and I say, "What do you think, doc?" And doctor says, "Hey, I think this is what you should do. This is how you should do it. This is, I think, the approach." And then you go to Dr. B and you say, "Hey, doc, I've got the shoulder pain, and blah, 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 blah." And they say, "Well, I think you should do X, Y, and Z." And it's totally different. How do I, as the patient, have any way of knowing which is the best diagnosis? I don't. I'm not qualified. Right. So we run into that when we're engaging in free work. There's lots of advisors and firms that do free work. But the problem is that for the prospect, they don't have any mechanism of actually truly evaluating one versus the other and saying this one is superior. It's based on their feelings and emotions and things like that.
Right. So that's interesting. So back in 2020, when we went all virtual with people, we totally changed up our approach too, and we went free. And we actually provided less of the planning before making a decision to help save time and to kind of extend the relationship a little bit. And because it didn't take us much time to create these free, really, we just did a 1-page plan. The thing that we added and got to practice so much because the clients over the years was it all had to do with communication. So, if they talked to 3 different advisors and they all said the same thing, we just communicate a little bit different when it comes to value and how to talk about that so that it was clear and there was no question that this is the way to go. Because that, right? Everybody knows that it's not always, unfortunately, as with anything, it's not always the best advisor that wins the new business. It's the one that can communicate the best. Thankfully, we're honest and ethical people and we love our clients a lot, but we just know how to communicate. So that's interesting. Yeah, I would just because it's the way we're doing it, I would think opposite of what you're saying, but I'm intrigued in what
Mhm.
you're saying around. I want to hear more about keep rolling. And I hope it's okay that
Yeah,
I disagreed with you.
I don't mind at all. People disagree with me all the time, right? I think what's interesting is, and what's powerful is that there can be a difference of perspective, um, and yet we can both be right.
Hmm.
So I think that's
Yeah.
what's interesting. School teaches you, and I have my own opinions about school, but school teaches you there's only one right answer. Well, in the real world, it's not. That's not true.
Yeah.
There can be more than one right answer to solve a problem. And the answer that I came up with was this idea of trust stacking, that we would have planning first. Prospects would engage for a fee for planning first. And that can either be for an upfront fee, it can either be on a subscription. And through, and I'll tell you why I think what you're doing works so well with what you're doing. And I actually think then we will actually have some agreement on it. But we've got to have some mechanism of building this trust gap. And it's easier, far, far easier to take a stranger from the internet, never met you before, don't know you from anybody, off of a media channel that is largely untrustworthy in terms of information and things like that, and engage in a client professional relationship under a fee relationship for planning, and then use that as the bridge for managing assets if the client wants you to manage their assets based on the planning that was done. Now, with what you're doing, your client acquisition strategy revolves around a media strategy that's very video based, and you have a lot of content. And so you're able to build this trust over time, but it's almost fully automated. And so at the moment they are coming to you and they're saying, hey, we would like some help. So that way, when they're coming to you, you don't have to necessarily put a fee in front of them to engage in any type of relationship. They largely already trust you, and you're knocking out some questions that they have. I imagine there's not a ton of friction in bringing on new clients. They're consuming the media that you're putting out into the market.
Yeah.
Right. You're solving the
Yeah.
same problem, right? Solving the same problem, just solving it a little bit differently.
Yeah. So then let's say, okay, so the subscription model or paying for a plan upfront that leads into the subscription model is kind of the route that
Yep. Or it could be subscription, or it could just be, I'm going to do, front end planning. And then if you decide if you want me to manage your assets, then I'll do that for, a fee. And then that will be the only fees that I charge. Some people say, hey, I'm going to do annual planning, or I have a planning fee separate from my asset management fees. And so you can have a number of different scenarios that work, right? It can be upfront fee for planning. It could be subscription fee for planning that we do ongoing, right? It could be one fee per year, right? Totally separate from our asset under management fee. Or it can be, I drop my planning fees if if we manage your assets, and if we don't manage your assets, then it'll be, our planning is X per year, right? So you can have a number of different models. And I don't think it's a one size fits all, right? I think you can have multiple different models, and they all work.
Yeah. So we've never done the subscription. Well, we actually have, but we didn't have a great, like quarter one, the focus is this, Q2 focus is this. Are you finding that is what a lot of firms are? What are the other firms that are doing this successfully doing? Because part of me thinks you got to keep, especially for subscription, you really got to show value frequently. Otherwise, they see the cost and think, what have you done for me lately? When really you've done a lot of upfront help and delivered a lot of value, but then they forget about it, right? So what are other firms doing in terms of just the model of how they're helping and what they're talking about with clients?
Yeah, so they're doing things like there's upfront planning, and that upfront planning usually touches on a number of key areas, right? It's managing assets, distribution, tax, right? There's a number of areas that are worked on in kind of what I call upfront planning. How I think about and how, you know, some clients are doing this very successfully on a subscription is then they are then taking that kind of core, you know, core plan and then picking a quarterly focus. So like, you know, Q1 is going to be, you know, we're going to be focused on, you know, taxes and that's going to be the focal point on Q1, right? Q2 might be, you know, asset allocations and management, and does this align with the current goals that you have? You know, again, so it's really dependent on, you know, how you break it out, but it's that idea. Take what you are doing up front, do that upfront planning, but then have a quarterly focus of just like one of those key areas.
Okay. Anything else related to the this idea of just like the first meeting process, communicating value? Anything else important for advisors to know?
Yeah, I think there's a big, I've spoken with, I don't know, 5,000, maybe 6,000 advisors over the course of the last 6 years. And most financial professionals believe about themselves that they are very good. And I think a lot of financial professionals do not consider themselves salespeople. Okay, if you're in business and you have any product or service to offer, you are a salesperson. Whether you're a consultant, whether you're a doctor, whether you're an attorney, right? If some portion of the revenue is directly associated with your work or activity and you are meeting with prospects, you are in sales. I think the problem is that sales has a very bad name associated with it. So a lot of people are like, oh, I don't want anything to do with that. And I just simply don't look at sales that way. But I think a lot of financial professionals think they are very good in communicating value, and most are not very good at it at all. And the reason why they think they're good at it is because most of their clients are coming from referrals. And so, or centers of influence. And so this goes back to this same idea of trust stacking. With a center of influence or a referral, we are basically leveraging or borrowing trust from that center of influence or from that existing client. And so this person that's coming to you now, they already trust you because whoever referred them, they trust them, right? So you're able to leverage this third-party source of trust. And it's like, okay, well, this is not very difficult. I convert 90% of my clients or prospects that come over from a referral or a center of influence, right? Fairly easy. When we go into an environment where we're dealing with complete strangers over the internet, now there's a completely different paradigm. And over the last 6 years in the work that we've done with clients, when they start to go into these digital spaces and find that people just simply show up differently, and what used to work doesn't work anymore, it's actually because they don't know how to communicate with strangers and communicate where they deliver value and how they help prospects. Because the sales environment is more psychology, and it's less about these are all the awesome things that I do.
Yeah, I get that. So, you know, I always thought of a lot of advisors are adverse to selling because, oh, I've got this great thing. I do it really, really well. And you'll see that it's great once you talk to me. But you do have to be able to, you have to be able to talk in a way that uncovers the value of that thing that you have. You know, sales is not talking people into buying what they don't need, can't afford, and don't want. Nobody wants to do. Actually, there are some advisors that would do that, or some, you know, salespeople that would do that. But sales is, to me, uncovering the value of what you have so well that it's just perfectly clear why it makes sense for the person or doesn't.
And I think that the challenge for a lot of advisors is they think that what they have to offer has intrinsic value. But again, going back to the prospect's mind, they don't know how to evaluate what it is that the advisor actually does. So unless that can be framed properly so that the prospect actually can see very clearly where there is value, it's very difficult for an advisor to bring on a new client outside of a center of influence or referral.
Yep. Have you ever seen Alex Hormozi's value equation?
Mhm.
That helped a lot when trying to figure out how to explain and communicate value, and just tie everything that we're doing to either increasing their ideal future, right? Whatever it is. Hey, we should do tax loss harvesting. Why? Well, it helps you pay less taxes next year. Okay. And then tying it back to their values or whatever they're going for, so
Mhm.
that you could keep more of what you make instead of paying it to the government. Oh yeah, I said I wanted to do that. Ideal future, and then chance of success. That's the part that might be the hardest for advisors, is how to tell story and anecdotes to increase the chance of success. And then reducing the time it takes to get there, and reducing the effort it takes for
I think
people,
a, I
your
think a really,
clients.
and I think a really powerful question that I've trained a lot of folks in is what's the cost of not doing it? What's
Yeah.
what's what's the cost of not getting this help
Yeah.
that we've already mapped out? Is right. You can see the challenge, you can see the economics of it. So if you can imagine 5 years forward and you don't solve this specific problem, what's the cost of that problem 5 years into the future? Let's just do some simple math.
Yeah. So good.
Right. Right. So
That's
that gives
true.
a powerful framework for them to actually evaluate where where that value is and to the dollars and cents, they can actually see it. They're like, okay, yeah, I can see, you're asking for, $600 a month, or you're asking for $2,500 for planning. And if I fast forward into the future, even maybe a year, even 2 years or 3 years, I can see that the economic impact is 50,000. The evaluation for a decision becomes very easy.
Yeah.
Right. Versus evaluating, here's my mechanism. Isn't my mechanism awesome? Aren't I awesome? My firm's been around for 20 years. We're awesome. You can see that, how awesome we are. Right. It doesn't, you don't need to go anywhere near any of that stuff. Right. The proof point is what will it cost you if in the absence of this help, in the absence of this strategy that we laid out, what will it cost? Right. So it's a very powerful question.
Yeah, I like that. The yeah, someone was just talking about this, that they don't really care. I think advisors try to sell the process, like their comprehensive
Mhm.
financial planning process, to cover every single piece of your financial life. And really, there's just one thing that they really care about. And if you just focused on that, the payoff for the person that you're talking to,
Mhm.
that's a great place to start, help solve it. And then you can lead into every other important thing. But like, that's the trust builder right there, is don't focus
Mhm.
on the person, yourself, the certificates, all the credentials that you have.
Right.
Don't focus on the process or your firm history. It's like, focus on the problem, help solve it for them, and then trust is there, and then you keep moving from there to the next step.
Yeah. And I like to break down um, that into what I call an offer structure. So I think most firms, most advisors, they have one offer, and it's like, take it or leave it. But if you actually take what you just said, where you focus on one thing and you just solve that one thing, and then that builds trust, and then you have another thing that's offered. The speed, the economics, the amount of trust, the amount of assets will move faster and flow freer if you have a structure where you have a front end offer and a back end offer, right?
Hmm.
So front end offer, really easy to say yes to, very low risk. Back end offer, this is traditionally the back end offers for most advisors. That's, hey, we're going to manage your assets and we're going to do all this cool stuff and blah, 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 right? High risk, higher risk, harder to say yes to, right? So, well, don't do this. Don't play this game. That's what everybody else is doing. Low risk, front end offer, easy to say yes to. Back end offer, right? 60 to 90 days,
So just to repeat, you said front end offer, help with the main problem on their mind, and the trust is built. And you said 60 to 90 days back end offer, which is the
correct.
assets under management. Okay.
Right. Which is that conversation is driven out of the planning that you've already done.
Yeah.
right? So it's a natural progression. It's a natural conversation to have next, right?
Yeah. Yeah.
Right.
Super compelling.
Yeah, but front end offers, low risk, easy to say yes to. Back end offers require high trust, right? High commitment, harder to say yes to. So you just stage your offers, right? Focus on this one first, have agreement, build trust, back end offer 60 to 90 days later. It's a lot more efficient.
Yeah. Are you finding, so if you get into, and sorry for going so detailed with this, but it's something that's fun to evaluate because we're not doing it. But if you start working planning only, and then there are investment decisions that could help, say it is the rebalancing in the middle of the year, tax loss harvesting or whatever it might be, that's investment related. Are you just telling the person where it's just a planning relationship and not AUM to go do it now, and then they see the work behind it, or you just don't even, our advisors not even touching that side of the planning, meaning not talking about investments from the front end offer, you know what I mean?
Yeah. So I missed a portion of what you said there. I'm not sure my headphones. I'm going to switch over here and see if that solves the problem.
Okay.
Can you
All right.
still hear me? Okay.
Yep, I can hear you.
Yep. Okay. All right. Perfect. So the when I think about a front end offer, there's this idea of future pacing. So future pacing is this idea in marketing that you talk about a thing, but you don't offer a thing, right? You talk about a thing that we're going to work on into the future, but we're actually not going to work on that until the future, until we've sorted out a couple of these other things. I know this is something that we need to work on, but we can't work on it until here, right? Mm-hmm. So here, an example of this that we work on with advisors. A lot of advisors come and they're saying, "Hey, can you help me with my marketing?" I say, "Yes, of course." After we solve your marketing, your challenge is going to be in your sales process. It's not going to work. It's going to break down. And 90% of our clients are like, "Yeah, I'm going to be fine." And then 90% of our clients are like, "Okay, you're right." Right. So while we talk about it up front, we're not working on it until later. So in terms of like investment management in a front end offer, you can talk about it as saying something, this is something that we offer, but we do planning first. And if you want to engage in our services to help you manage assets using our processes and et cetera, we can certainly have that conversation, but we can't have that conversation outside of figuring out what you need, how much you need, where you need it, where all the problems are. We got to figure out all that stuff first. Right. So you're delaying, even though they may want, "Hey, I just want you for your investment management services." You're saying, "Yeah, that's cool, but I can't even offer that to you until we've figured some things out here up front."
Got it.
Does that make sense?
So it does. Yeah. So we covered going, finding ideal prospects. We talked about the sales process or the offer. And then there's the kind of the back end internal, not the back end, the internal operations to make sure everything is running and things aren't breaking. Before we move to that last part, anything else offer related or sales related that are important points you'd like to share? Or did we cover most of it?
I think just in terms of sales, I think that one thing that I've observed is that how you go into a sales conversation, essentially your persona that you carry into a sales conversation, will often dictate the results of that conversation, from an acquisition perspective and from a velocity of yes or no perspective. And there's actually been some really interesting research around this, by Harvard Business Review did a whole case study on this. They reviewed sales processes across it was like 3,500 sales professionals. And one of the things that they discovered was that the relationship builder, right, the person who goes in with this idea of building relationships, which is very common in financial services, were the least successful. And people that went in with what I'd call more of a consultative approach and would challenge the thinking or open to challenge the thinking of their prospects were overwhelmingly, they generated more revenue, they had higher conversion rates, et cetera, et cetera, et cetera. The metrics were far in favor of the consultative approach, but consultative also requires sometimes being what I call confrontational. And confrontational is at opposite ends with a lot of times the relationship builder sale. Right. And so the mindset kind of going into a sales environment or prospect conversation, you've got to decide, how am I going to show up? Am I going to try to build relationship? Am I going to try to demonstrate? Because that's another modality of a sales professional, that I'm going to demonstrate. I'm going to try to prove and show all of my value. Again, that goes back to the whole conversation we had about prospects are very ill-equipped to evaluate, the merits of one thing versus another, right? So persona is a big component. How you carry yourself, how you, the mode at which you operate your sales process around does have a significant impact on your outcomes. That's a whole nother conversation. I mean, we could spend an hour on that, but that's a big thing. Yeah.
Fascinating. I always thought too, or not entirely related, but it's like the feeling of, if you can go into the relationship with a new potential client really just around service and not worrying about, if you can not worry about them becoming a client or not. And it's kind of like that thing of like, if I lean in, you're going to lean out, and vice versa. Like, advisors know that they have the thing, or most of them know that they have the thing that this person needs and can help them in a great way. But when you're too over eager, you want to be excited about it and helping them, but you don't want to have that feeling of like, oh, I really need this to happen. Whatever that is called. It's like basic human psychology kind of. Yeah. It's just that idea of, not wanting it too much. Want to help, not
I think it's
sale.
One of a client of mine, I was a client of his. He's written a couple books, Oren Klaff. He's written Pitch Anything and Flip the Script. Both I recommended readings. But one thing that he talked about when I was a client of his, he helped us, raise capital for a business that we were working on, was this idea that you have to eliminate neediness. You got to eliminate any neediness that you have in your process, that you don't need this person as a client. You don't need their money. You don't need their, right? You don't need to help them, right? You are essentially the prize in the process, not the prospect, right? So you can operate from a place of high trust, service, value, but you do not need to go play this go fetch me a rocket game that a lot of prospects want to have advisors engage them in.
Yeah, that's good. So, Mark, do you have any advice to advisors when it comes to, a lot about the tech stack of advisors and what's common and what good setups and things like that? We're actually evaluating next year our CRM. Actually, we're focusing on the process manual first, which we have one, but we need something that is something that anybody can pick up and do whatever the task is to get done, right? So we're reworking the process manual. Once we have that, then we're going to get the workflows and things set up in the right CRM. That's kind of our current need. We also, I'm just throwing this out, and you can take it whatever way you want. We're also looking at so we've got the sales, this lead engine that's working. People are coming in. And we're tracking things on a spreadsheet right now, on a Google sheet. And we're looking at HubSpot, we're looking at the sales CRM, and then we're wondering, there's like the financial advisor CRMs that are out there. And then there's what we think we would need, which is like the HubSpot or kind of the sales tracking CRM. Do you think those are two separate things, or are there things out there that can be combined into one? Because there's just so much opportunity for what's coming in, and it feels like a lot could be falling through the cracks.
Yep. Um, so from a tech stack, we've moved all of our clients over to a platform. It's called Apollos.io. We actually white labeled a platform and then customized it for advisors. And how I think about, and it's got a lot of crossover functionality with HubSpot. It's got a crossover functionality with Salesforce. It has crossover functionality with other tool sets like ClickFunnels, Active Campaign, Keep. So when I think about client acquisition, I think about the optimization of client acquisition is done in a client acquisition CRM system. And that thing needs to do a number of things, right? It needs to be able to track by source where people are coming from, what offers or what content people are responding to. It needs to have some automations and mechanisms by which AI or a robot can automatically respond intelligently to people's requests, and have some type of pipeline management that financial professionals or sales professionals don't hate. So in a live event I did, I guess it was about 2 weeks ago, I asked a question there was 19 advisors in the room, and I said, who here likes using CRM or a CRM system? And everybody was like, no, hate them. Okay, so if as a firm leader, if you're going to ask your team to use a CRM, they're probably going to hate it unless you show them why they can love it. And where a lot of advisors and what I call salespeople in general, it's all of this manual input that leadership wants. Salespeople don't want to do it. Mm-hmm. And so unless you have a mechanism by which you can capture all that information, so you're not requiring somebody on the front end who's handling these prospect conversations to now put a ton of more content in and basically add to their workload, but you can make it very seamless, drag and drop, move one person from one stage to another. And from a leadership perspective, or even if you're just doing it yourself, you can see, all right, this person's here, this person's here, this person's here. And I easily with almost an instantaneous look, I know what I need to do and who I need to do that with. So when I think about prospect or client acquisition, I see that as a different system than client management. Mm-hmm. Right. And this idea that we want to combine both of those into one, I think is they're two totally different. They're two totally different things. Right. Yeah. Right. The work that you do for client acquisition is very different from the work that you do right in client management.
Okay.
Mm-hmm.
Got it.
So
that makes sense.
I see those two as two different things. And I know in financial services, you have to have, like, there's certain record keeping requirements for clients, right? I'd have a system that is specifically designed for that type of thing. But to try to make that CRM, like, super powerful from a client acquisition perspective, that's wrong thinking. It wasn't designed to do that.
So the Apollos one that you were talking about, mm-hmm. That's client acquisition, or it's client
acquisition
management?
Client acquisition.
What do you see for the client management side? I mean, there's the big ones that everybody knows. Do you offer recommendations on that? Do you see ones that work better than others? Doesn't matter.
It doesn't matter to me, as long as it addresses the record keeping requirements, and it's easy to search and it's easy to use, and it's not a burden on the operations. I think that's mm-hmm. where I think about from an evaluation perspective. Hey, does this check the boxes? But in terms of like communication, I would use a client acquisition CRM. I'd use it for both what I'd call mass communication to prospects and mass communication to clients. I would use that same system, because you're going to still have a full record of everything. But the one-to-one stuff, I think about using a CRM that's dedicated, just for client management, separate from acquisition. Does that make sense?
Gotcha. Yeah, it does. Any other thoughts on workflows, on process manual, anything related to just make sure the foundation is strong and you can scale?
Well, yeah. So from a process perspective, I think about the things that you do on an ongoing basis that, can they be automated? Are there manual things that you're doing on a regular basis that could be fully automated? Because you think about the return on time from a leverage perspective. And if you can automate it, maybe it takes you 5 hours or 10 hours to build the automation. You'll get that back year over year over year by building it once. And so that could be, let's say that you do quarterly meetings with your clients. Instead of having you send out the communication, what if you had an automation that was already pre-built for it? You add a tag in your CRM that says, this is, a client. So therefore they're going to be in the quarterly, meeting. You have all those emails go out automatically. You have text message reminders also going to your clients to schedule their appointments. You have an integrated calendar that's already integrated into the whole system. And if they don't schedule with you, you have the automation recognize that they didn't schedule their quarterly meeting. And that could prompt a text, it could prompt a phone call, it could prompt something else to do some other type of connecting with that client, right? All that stuff can be fully automated. You don't need an assistant to start to organize all that. It can be fully automated, and you set it up once, and it's going to run for years and years and years and years, and you don't even need to think about it anymore.
Mm-hmm. Interesting,
right?
And that's I know we don't need to go to the how, but is that like the email service provider? Is that okay?
Well,
is that also Apollos?
The email, yeah, that's also in Apollos, where you have this automation system that is configured to run specific tasks, which can be emails, it can be appointments, it can be reminders, it can be multi-threaded, meaning it can go out over voicemail, it can go over text message, it can go over email, right? And so you have a multi-modalities of reaching a client or prospect communication, and it can all be based on rules. So you certainly need that when you're dealing with prospects and acquisition, but you also need it with oftentimes client communication. Just think about like the amount of time that you get back if a lot of the stuff that you do on an ongoing basis, communication wise, was templated and automated.
Yeah.
And you create groupings within your database of clients that categorize certain clients in different buckets. That's another thing, right? Segmentation of your book, segmentation of your client base, right? You don't have clients that are all the same. So here's one idea that one campaign that I talked about at this live event was, let's say that you have some type of subscription model, right? In your business. It's a really powerful campaign. We know just from the research that the majority of assets right now are held in the demographics of 65 plus. Majority of the managed assets, the wealth, if you will, are held in the older generation. Well, as that generation passes, where's that money going to go? Right?
To the kids.
To the kids. So how many, I was having a conversation the other day with an advisor. I said, how many of the kids do you have as clients? And he's like, very little. I said, well, where are those assets going to go when some of your clients start to pass away? He's like, I have no idea. They'll probably spend it. He's like, they won't have a plan in place. They won't know what to do with it. They're not prepared for a wealth event. And I said, well, why not just, instead of looking at trying to acquire more clients that look like your current clients, why not create a plan and a campaign that just goes after the next generation? You put them on some type of, subscription, and the only reason why they can get that is because their parents or grandparents are clients, and you do planning and you prepare them for that. And so instead of wondering where are all these assets going to go when your clients pass away, you're preparing the next generation for that wealth event. And so you retain the assets and you're also simultaneously generating revenue. So if you have segmentation in your database of clients of these, right, these group of clients have, kids, right? Now you can start to now create a campaign where you can kind of go after and look at an acquisition strategy of the next generation to retain those assets and to build value, not just with the next generation, but actually serve your current clients as well.
Wow.
Right. So you need segmentation in your database to be able to do that.
Yeah.
Mm-hmm.
That's great. Mark, this is awesome. Thanks for sharing all of this. We kind of covered the whole thing. Where do we find people? How do we talk to them so they can become clients? The models, the offerings, and then how do we shore up the home office so that things are efficient? This is huge. Thanks for spending so much time. I know you got another thing you got to get to coming up. Where should advisors go to learn more about what you're doing, and what's the next best step to take to get to you?
Yeah, just my website is just castorabbott.com, CASTORABBOTT.com. And it's a pretty lean site, but there's some ways people can learn more about what we do in our work and mechanisms to reach out.
Okay, perfect. This is great, Mark. Thanks again.
My pleasure.